As many of you know, the political stage is set for true public-private sector collaboration in delivering on concrete results: water and sanitation, energy, transport, health, education. And on this panel, we have public and private sector leaders that really, within their mandates, have that challenge. So the kinds of solutions that we need were in fact embedded in the 2002 UN Monterey Consensus, where all UN member states talked about the absolute imperative to scale up risk mitigation, project preparation facilities, capacity building, and of course the Addis 2015 Action Accord puts a big emphasis on sustainability, and we have our friends in the business community understanding that and creating indices and credit ratings that integrate that. However, the challenge is huge. If you look just at the facts, the World Bank Public-Private Infrastructure Index for 2014 has only a total of $107 billion of private sector funds in infrastructure. $107 billion. What is our funding gap to deliver on the Sustainable Development Goals? It is estimated in the range of 1.6 to 2.8 trillion by the UN. So we sit here today with an enormous funding gap. How much of that is in Africa? 2% in sub-Sahara Africa. So I'm going to start off asking our different panels members questions, and to make it more interactive, we thought that each person would give a short answer of about 2 minutes, and then we do a second round and try to build on it so we can really do the kind of brainstorming that we were encouraged to do. So we had said that we would then go back and comment on each other's comments. So do you want to do that do you have some points that you'd like to bring forward if we go back in order, starting with you, Keiko?
Well, you know, a lot of interesting things said. I think I definitely agree. The government may not necessarily truly believing it's every single private investors. Having said that, private sector may actually sometimes feel the same way. And so therefore, some kind of, I don't know what to say, cultural interpreter or some sort of navigation tool will be necessary. And then I think Elizabeth, as well as, OPIC, as well as MIGA, has been playing this role. Then we should definitely play the role. And also, I just like to briefly touch upon Gargee's point of municipal, local, based financing. I think I cannot really agree more. As a matter of fact, MIGA introduced new products called no-knowing of sub-sovereigns. We supporting some cities who are actually facing their own issues to raise the financing. Specifically, we extended the credit enhancement for Istanbul City and Izmir City of Turkey. What we really found out is that some of the large cities in the middle-income country, even in Africa, I think facing their own issue, traffic congestions, lack of affordable housing. And for those cases, we started to doing it. But I think that product has a strong interest from the cities, but not enough interest from the private sector yet. Obviously, I think this may be a good opportunity for Convergence to maybe advise us how we can market better this product. Thank you.
Well, it's really interesting, the fragmentation, for example, on subnational finance. You have many different programs. In fact, we're now funded by Rockefeller to work with the World Bank City Creditworthiness Initiative. Separately, Gargee, you talked about pooled finance. We actually launched at Addis a local financing framework using pooled finance. In fact, I directed that study, and it was supported by the French government and FMDV and others, but there's so many different initiatives. And so I think there's an overriding question about how we're more effective in being able to have synergy and in the process, make sure that the targeted beneficiaries know about your product. So again, I think that's a very good follow-up mechanism here. David?
Well, certainly convergence is there not only to help the private sector, but equally to create comfort and education and to demonstrate to the public sector that we are not evil, that we are actually sort of common goals, and that we can help each other. Elizabeth kind of nailed it earlier, and I was going to jump in, but you were on a roll, so I didn't want to take the wind out of your sails. But being able to speak to the two languages is a challenge, and that has been the position that I've sort of found myself in for a number of years now. But it really is extremely different. I mean, right down to acronyms, which public sector loves, but then again the private sector loves, but they can also have a lot of acronyms that are the same letters but different meanings, and that's a challenge. I mean, I found in the very early days when we were talking about A loans and B loans in partnership with the IFC, for example, that the private sector was instantly saying, okay, so this is a CLO, and a B sector would be of lower quality than the A. And you say, well, no, it isn't. And well, then why they call it A and B? And so you sort of got to run through all these things from a very, very fundamental basis, but you just cannot take it for granted that everybody understands each other. And that is the challenge, and that's the mantra that we have to have in order to be able to bring everybody together. And I think that the wonderful thing that has happened over the last number of years is that I am seeing from a governmental level that there is a real desire and a recognition that aid between governments has not been successful, and that they better get on the bus and work with the private sector, both from a funding perspective and a fundee perspective, because that is where the Millennium Development Goals and the future goals going forward are going to be achieved. So that's the most important thing, and I'm really heartened to see that that's beginning to happen.
Okay, great. Thank you, David. Matt?
So there are obviously a lot of areas where government's involvement is vital to get things moving, particularly heavy infrastructure and that sort of thing. But for most business people and entrepreneurs, whether it's in the UK, the US or Africa, you ask them what the government can do to help their business grow, and then 99% of them would say, get out of the way and leave me to it. And you know, that's kind of the way it feels to us. I'll give you two specific examples of things that governments could do to promote economic growth and as a side effect, make my job easier. One is within Africa, promote regional integration. There's far too much barriers to internal trade. It's too hard to move people with skills between countries. There's a lot of contradictory regulation, so some things are compulsory and some things are illegal, the same thing in different countries for no reason. Why do you know, Kenya, Rwanda, Uganda and Tanzania all have stock exchanges? There's a lot that could be done to make people more prosperous by pursuing regional integration. I know that removing barriers always creates some losers as well as winners, and losers tend to be louder than winners, but that would make an enormous difference to the investability of some countries. Then we in the West, I think, from the financial services perspective, need to recognize that an unintended, I presume, consequence of some of the hefty regulation we've brought in over the last 5 or 6 years to combat financial crime and various things is the financial exclusion of people in the developing world. And you know, it's hard to find people who, in public, in private everybody agrees with you, it's hard to find people in public who are willing to have this conversation, but it is a real barrier to investment by international financial services firm, and it doesn't need to be.
Sorry, Matt. Can you be a little bit more explicit about what you're referring to?
Yeah, I can be very explicit. So regulations to combat money laundering and terrorism, which are obviously you know, important things that we very much support, but they don't have any materiality thresholds in them, and so in principle we're obliged to screen people who are paying us $1 a month to see whether they're on a sanctions list, and it costs more than $1 to run that check, because you get a lot of false positives. A lot of people are called Matt Lilly, and you've got to find out whether I'm the good one or the bad one, no governments will give you an undertaking that they will never under any circumstances pursue you if you apply sensible thresholds to that, and it makes people just hold back. It's very hard. It's even worse in remittances, but it's not my industry. But.
And of course, we have the right words politically, talking about business enabling environment, streamlining, all that kind of good stuff. But operationalizing that and getting it done is another matter. Elizabeth, do you have some additional comments?
Sure. Yeah, thank you, Barbara. You asked us to think of some specific things that we could do to stimulate private capital flows in the service of development. And I would just mention a couple. There's some really, really simple things. And one example of that in the power sector that OPIC has generated is a little consensus document on one piece of paper that lists the 10 elements of a power purchase agreement that banks will bank. So we got consensus among I think about 9 development finance institutions as to what are the 10 things that are non-starters if you don't have them in a power purchase agreement. And we've been disseminating that to governments and banks throughout the world, and people think it's a huge help in narrowing the gap between what governments want and what developers want. In fact, if anyone wants a copy of that one-page document, just let me know. My colleague Ben has a stack of them over there. But then, so that's a sort of simple, on the simple end of the spectrum. In the middle end of the spectrum are developing new products, very similar to convergence and some of the things that Gargee mentioned, which we too have engaged in, developing the capability to do, for example, local currency financing, developing the capability to do inventory finance or working capital finance, which we never did before, doing mezzanine finance. So we've developed a whole range of new products that help fill gaps in the financing spectrum. But then on the big end of the spectrum, this may sound like shameless advocacy, but I would just say, as a development finance institution, I find it weird that the DFIs are not growing faster. If you think about it, development finance institutions are the bridge between grant money and needs in country. And if you think about it, development finance is correlated to FDI, whereas grants are correlated to ODA. And even though you've seen in the last 40 years a complete flip between the preponderance of ODA flowing to these countries versus now FDI, right? 40 years ago, the vast majority of the money flowing from the West to, say, Africa was ODA, and now the vast majority is FDI. Yet the agencies like USAID and OPIC correlated to FDI and ODA, have been frozen in time. So the fact that, frankly, our aid agency is 30 times the size of our development finance institution seems a little weird to me. So I think one of the things we can do, frankly, is recognize the role of those bridging organizations like the development finance institutions who can provide the kind of finance between the commercial finance and grant money. So anyway, that's my shameless advocacy. Frankly, the creation of the Asian Infrastructure Investment Bank, the BRICS Bank, this is all an indicator that there's a desperate need for some kind of finance to grow faster that bridges the private market finance and grant money. That's my shameless advocacy for development finance institutions.
I think it's wonderful you make that advocacy, because we need to do more deals. We can't get the deals done without the support of the DFIs. I think the issue is knowledge, coordination, and we have a sell job, right, in the private sector for people to really believe. So being able to have those positive business models and that momentum is critical to scaling up. So maybe that's something we can brainstorm more about as well. Gargee. Do you have some additional comments, reactions you'd like to share?
Sure. Maybe just 3 ideas that strike me from this conversation, and I'm obviously pretty deep in sectors, so they're relevant there. First, Elizabeth, I think, talked about information asymmetries, and it strikes me that we too very much feel the lack of market intelligence in the sectors and geographies where we work. So that, I think, is a gap that I'd certainly love to have a conversation about. 2, sector-specific economics. When we work with investors, I think we are used to people who, working with people who sort of understand geographies and have a tolerance for working in complicated geographies. We're ready for sector-specific expertise to help deconstruct and understand and invest in the health sector, the agricultural sector within the geographies. And then third, for the public sector, we need a better way of measuring and understanding results in the public sector. So, for example, if you speak to ministers of health now, I'm sure there might be some in the audience, that it's very hard to understand what's working and what's not working in a primary healthcare system now, and therefore even harder to articulate where you need more investment, where there's a role for the private sector, where the public sector can build up its capacity. So we need to work on a kind of results agenda, I guess, would be the public sector word, so that we can sort of articulate better the needs in the sectors where we work.
That's truly compelling, I think, across the board. In fact, in the side event that we co-organized in Addis, that was one of the reactions of participants. For example, in water and sanitation, the fragmentation between the different groups, for example, working on water and sanitation deals in Africa, not working together, and how did they connect to the potential providers of support from the public sector, as well as new technologies that are needed to be smarter about how we do water and sanitation. And James, do you have any additional comments you'd like to make?
Yeah, thank you, Barbara. I would really focus on the issue of concrete roles that Equity Bank would play in this, as you had requested. And basically what I see Equity doing more is expanding its presence on the African continent so that we can have a greater reach. I think greater innovations, particularly on products targeting micro, small, and medium enterprises. We think they will be the engine of development and sharing prosperity on the continent. And lastly, it's looking at delivery channels, and we are thinking the mobile channel might be a very unique channel for ensuring more accessibility, more affordability, and more convenience in the financial sector. Turning to development partners and policy makers, I think one of the issues, as Elizabeth have raised, is scaling up these operations. Those flows needs to be scaled. Great organizations like the Bill and Melinda Gates, great work on the continent, but if we could lead a harness that for greater impact, I think that would do, and MEGA helping us to manage greater risk, particularly in volatile regions.
Yeah. Do we want to just think a little bit harder about some common themes on how do we scale up? You know, for example, Matt, you spoke about the need, I believe, to train 1,000 people in your operations. And James, when you talk about scaling up initiatives and equity and the like, I mean, the fact is that we really don't have an adequate number of professionally trained people to do a lot of these projects. When it comes to infrastructure, we lack local financial advisors with the skills to put together special purpose vehicles to help negotiate offtake agreements, to be able to help bring in equity investors that know about the different risk mitigation instruments that exist. the environmental engineers. Do people have any particular thoughts or comments about how big that issue is and how to deal with that?
So where did you want? Yeah, I mean, our business is a people business. We don't make anything. We sell promises to people, and so our business, nobody in the world gets out of bed and says, I'm going to buy some life insurance today. And if they did, you probably wouldn't want to sell it to them. But so the business only grows as fast as you can build a network of trained, skilled financial advisors who can go out and meet people and explain to them how insurance works and why it can benefit from them. And those people take a long time to train, and the people who train them take a long time to train. And it's not about telling people what to do, because you know, we all know that whatever job you're in, if somebody gives you a manual, it doesn't really help. It's about accumulating the experience. And so what actually counts, unfortunately, there's no magic formula. The magic formula is hard work and time, because it's about building an organization where 3, 4, 5 levels down, people have a lot of experience and competence, and you can't just magic that together. It takes time.
Elizabeth, you look like you want to say something.
Well, I mean, I think one of the challenges that we've all touched on in different ways is the difficulty of bringing together different types of capital to bear on one problem. So a given problem, say, I'll come back to building a power plant, may require long-term debt finance, but it also may require equity, and it also may require political risk insurance, and it also may require grant money to pay for the international lawyers that the country needs to be able to negotiate the deal. So I think one of the challenges we have is bolting together the grant monies, the debt finance, the mezzanine finance, the technical assistance, et cetera. And this is an area where I actually have seen President Obama's Power Africa initiative working remarkably well, wherein for the first time ever we've had quite a good coordination amongst the U.S. government agencies working in Africa in the power sector. And I'll just give you one example of that, where USAID is able to provide transaction-specific technical assistance to help advance a specific power plant or power project. And we've never really seen that before. So they've been able to pay for example, legal advisors to the government of Ethiopia that were able then to advance the negotiations. They were able to provide technical assistance to the government of Tanzania to help extend the power purchase agreement to be long enough to be bankable. So I think the importance of bringing different institutions, tools, and instruments together and putting aside, you know, institutional agendas and egos and really figuring out how we can bolt together our instruments to advance a common agenda is one of the biggest challenges, but I'm heartened to see it's worked better and better in certain circumstances.
Elizabeth, I find that is just such a cornerstone statement. And in fact, the Financing for Development Business Steering Committee tried to make it clear to the FFD co-facilitators and the member states that when you talk about blended finance, you talk about a new development architecture, it doesn't work unless you can exactly do that on a deal basis. And we don't have the institutional framework for doing that. So you could argue that at the country level, where you often have development partners that work together by sector, for example, in Tanzania, the Energy Development Partner Working Group, that could form a nucleus for working around a deal for the different inputs. But it's really a missing part of how to bring it all down and empower the project sponsor. As some of you may know, there, in addition to Convergence, there is another initiative, linked initiative, sponsored by the OECD, SDIP, the Sustainable Partnership for Investment, or Partnerships or something like that, which is supported by USAID, Swedish SIDA, Citibank, and a bunch of other institutions, and it's going to be an open platform as well. And it's exactly the same challenge, is how can we all work together on a transaction basis? And related to that is the new way of measuring ODA, TOASTI, that is going to be used for measuring development partners, not just looking at ODA, but how much private sector capital they've mobilized. So these different mechanisms maybe start to put together the framework that we can kind of refine and work with and somehow bring it together so it's very practical from a business point of view, but it also, because it's practical and it's deal-based, it can deliver on the SDGs. Before we open it to the audience, are there any other ideas that people want to put on the table to build, to flesh out, to seek collaboration, partnership, or just to brainstorm?
Thank you, Barbara. I would like to build on, while we address the supply side and the issues supply side, that this mad aspect also needs to be looked at. When we talk about financial inclusion, we need to think, how do we bring millions of these people into the system? How do we build their capacity to be able to use the products and services that the financial sector, for instance, will be providing? So there's a huge role for collaborations, whether it's civil society, NGOs, foundations, and development institutions to build the capacity on the demand side.
Just to try and make sure we have a precise understanding of the modality. I know, for example, that in Kenya, there's some talk about having retail bonds, for example, and maybe even retailing shares in equity funds. Are you also thinking, when you talk about having different modalities, of those kinds of instruments in the markets, or not?
All included. Yeah.
Okay. Well, we've put a lot on the table, I think, to grow. We're creating seeds. Can we ask our participants of any comments? And if you could please stand up and identify yourself, please.
Thank you for that. So we decided in 2010, when I joined OPIC, to focus on renewable resources as a sector priority, although of course we're very active in housing and tourism and infrastructure of all kinds. And the reason for that is that we looked out and saw, where can the private sector play the most powerful role in development? And we looked at three forces converging at the same time: resource scarcity, a growing middle class consuming those resources at an accelerating rate, and climate change. And thought those are three forces coming together that create not only the biggest challenge mankind has ever known, but also the biggest opportunity to really transform our economy once and for all from a polluting, inefficient, exclusive, dirty economy, if you will, into one that is inclusive, clean, efficient, and inexpensive. So we decided to focus on renewable resources as a sector, because we felt that this is an area that problems that can't get solved without the private sector and can't get solved without the public sector helping the private sector solve them. So in the ensuing years, having established that as a priority, we've seen our renewable energy portfolio grow tenfold since 2010, which has been very exciting. We're now doing a little over $1 billion every year, and have been for the last 5 years, in renewable energy, particularly on the continent. And we'd like to be doing more and more in some of the sectors that Gargee mentioned, which are a little bit more challenging to find ways to finance in a commercially viable way, such as water and forestry, even ecosystems, agriculture. But we are seeing our portfolio in those sectors grow faster and faster as well. Not as fast as the energy portfolio has grown, though. Thank you.
Yep, so sectors, health, and in particular infectious diseases, agriculture, smallholder, financial inclusion, and sanitation. And geographically, as I think you know, Paul, we are bit of a hybrid because a lot of what we do is innovation focused that's geographically agnostic, although it's with an eye toward what will work in the markets in Africa and South Asia. But increasingly we have sort of footprints in a dozen or so countries: Nigeria, Ethiopia, Tanzania, DRC, Kenya, India, Bangladesh.
We have a lot. So perhaps Mahesh, I saw you first. Please stand up and identify.
My name is Mahesh Patel. I'm struck by the absence of any mention in connection with scaling up, in connection with inclusion of technology. The biggest change in Africa, I would say, has been mobile. It has connected maybe one half the continent. And to talk about all of this is important. But I'm on the board of a technology college, one of the best in the US, Harvey Mudd. We sent a project team, Global Clinics, to Kakira in Uganda with the sole purpose of testing equipment that would convert unpotable or non-potable water into potable water. I don't hear in financial circles any real focus on innovation. And I would challenge especially Bill Gates Foundation to focus on things of this nature where it can have tremendous leveraging effect, because you have technology that you brought to the world. So I would like to ask what is the thinking? Mobile, of course, is harnessed by Equity Bank, or is being harnessed by Equity Bank and others. So I would just like to hear what thoughts around the table you have on leveraging of innovation, technological innovation.
Just as a preface before people respond to that, if you look at the Addis Ababa action agenda, there is a big focus on technology, and in particular, trying to address the quandary we have. Not only is it hard to develop, but now, as you say, Mahesh, we have to develop being smarter and being able to connect the new innovations to the targeted beneficiaries, thinking about dissemination channels, local partners, new sustainable business models to really make that happen. So I think it's a huge challenge. Who wants to speak to that? Matt, you want to?
Sure. I know James is going to say something as well. Technology has a huge role to play in financial inclusion and the development of financial services industries, but it's limited, huge but limited. It can't do everything. So in Ghana, for instance, we've covered more than 1 million people who've bought life insurance through their mobile phone, in partnership with a mobile phone operator. And those are people who, on the whole, would have been too expensive to provide them with insurance if it had to be done by a traditional channel. But it's only low amounts of insurance, and I don't think it can really scale up in terms of the size of the insurance that you can provide people, because you get to a point where people have to understand what they're buying, and you have to be able to prove that they understand what they're buying, and that's very difficult through technology. As a payment mechanism, it will transform all goods and services across the world, but particularly in Africa, where infrastructure makes it hard to do that. I'm sure James will.
I think I will only add that technology will be the biggest enabler of all these transformations we are talking about. You cannot reduce the cost of doing business significantly to be able to incorporate the small transaction, value transactions, without going through technology innovations. You cannot really spread great access across the African continent, given its massive nature, sparse population, without leveraging on technology. So certainly technology will be a centerpiece of this transformation.
I'll just add from the Foundation's perspective, I think the lack of discussion may be more the way the questions are asked than what we're doing, because certainly from our perspective, exactly as James said, our view is the best thing we can do is sort of innovate to change the way services are delivered in the sectors where we work. So we invest in innovation in drugs, diagnostics, vaccines, drought-resistant or flood-resistant seeds, new toilets. I would say that the interesting thing there is how we match a clearer articulation of demand with the innovation sector, so that we're not sort of pushing supply-side apps for everything that can't actually get used. That's one of the important things that we're focused on.
Well, in Amiga, we actually see the current revolution of technology, especially like telecommunications or internet, is a second industry revolution. And then, for example, like a mobile phone is now a part of the infrastructure. Having said that, we're supporting investors in mobile phone sector in very difficult countries in the continent, including Mali and Central African Republic. And actually, I can name a lot more for world civil disturbance coverage. The reason is, whenever some civil disturbance happens, mobile telephone towers are typically the first one to be attacked. But having said that, we strongly believe those are the great infrastructures. African people deserve it, so therefore, MIGA would like to continue to support.
Do we have any other comments?
Maybe I'll just say that technology is something that we sort of build into the investments that we see being attractive. So within the financial services, we are investing in all kinds of different opportunities, whether it's micro leasing or small banks or what have you, that are actually using credit screening technology in order to be able to be much more efficient in the way that they process deals. So along the lines of what Matt was talking about within the insurance business, we see that as being something that creates an opportunity for investment. So these are now profitable institutions rather than clunky old institutions that just weren't able to get off the ground. So that's an opportunity that we see as being something that will continue to grow.
Yeah, I think one way of thinking about it is the digitization of economy is a key driver of growth. We have a question here. Can you please stand up?
Yes, hello, Rob Colorina.
There's a, thank you.
Yes, hello, Rob Colorina with AIAC Investments. My question is a little bit more towards supply. Can you speak a little bit about either the demand for things like business plan presentations or folks looking at funds? And I think one thing is to come up with entrepreneurship, and another thing is things that are investable and financeable. I think there's a certain amount of scale there. So the question is a little bit more lessons learned of are you seeing different sectors, different types of plans versus, let's say, 3 years ago, and either reasons why or maybe improvements of that model?
Sorry, maybe I can
Okay,
ask
sorry.
clarifying.
Sorry, I'm getting distracted. Does someone have a response?
No, I just ask a clarifying question. Are you asking for whether or not we're seeing an improvement in the quality of business plans and proposals for financing?
Yeah, Elizabeth, it's a combination of both quality, quantity, and then those that get rejected are there lessons learned where you say, you should speak to this other company, or you should speak to this, this type of advisor. Lessons learned, so they come around a second time with a more improved plan, or maybe situations like in James, looking at greater regional plays more than just one country. That's the nature of the question.
Does this question relate back to, I think, Gargee, you talked about market intelligence, and we've also spoken about the importance of having leading business models, and David, in Convergence, you talked about the importance of putting together a database on that. Does anybody want to talk more about that?
If we talk specifically about proposals banks are receiving, if you look at, for instance, in the East African region, the credit component aspect is growing between 15 and 30% year in, year out, and that really reflects increased volume in terms of lending, driven not necessarily by size, but number of new applications. And when you look at success rate, specifically like equity, we've moved from a success rate of 35 to 47. So there is improvement in quality of the applications that coming through the doors of the bank.
You know, I can maybe add on that at the next level up in terms of business plans that are being submitted. So we get about 2,000 proposals or inquiries in a year, and we do about 100 transactions. And one of our biggest challenges is, what do you say to the others? And where do you send them for technical assistance and advice in putting together a decent business plan? I mean, some of the ideas just are terrible ideas, but a lot of other people really need help in figuring out how do you put together a business plan, and it would be great. I think it's one of the areas that we've not figured out how to do this yet. And in a way, I think convergence and initiatives like it can be very helpful in creating kind of a global referral mechanism, because there's somebody out there that should be helping those organizations put together something that then can be ready for our kind of finance. We try pretty hard to refer organizations to, for example, USAID, if we think USAID can help. The development finance institution community is getting pretty good at referring business to one another, since we all have different policies and priorities. We're getting pretty good at syndicating. For example, deals that are too big for us to do on our own, we work very closely with EBRD and the IFC. But where we aren't very good yet is exactly the thing you're mentioning, is how do you help the little guy who, frankly, for whom English may not be a first language, who hasn't been to business school, who doesn't do PowerPoint, you know, whatever, get the tools to make his pitch in a compelling way that we can efficiently respond to. So I think it's a real gap in the market that you've put your finger on.
And that's what we are called for support on the demand side, building capacity on the demand side. I think that is significant opportunity.
And let me just point out here that in Addis, it's one of the proposals that we put forward. One of the most used words in the Addis Ababa Action Agenda is capacity building. But the fact is, we're failing at the country level in really delivering on that. And back to Mahesh's point, we should do a much better job of providing templates, online learning, combined with workshops and universities, real university programs, to deal with this if we're going to crack the gap. I've been a little bit distracted here because we've had some shifts. You know, we have to be flexible and resilient, especially today with this situation. And if I think what we need to do is to close out this session. If you have additional questions, please approach our speakers, because we had a delay in our next session, but now we're going to have an abbreviated next session. So if you could be patient and accept that, I would like to ask you to join me. I feel very enriched and inspired by the ideas and the initiatives and the leadership of our speakers, and I really thank them, and please join me. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.